Hello and welcome. Today we shall be looking at GlaxoSmithKline PLC. GSK has a market capital of £74 billion and is currently 6th in the UK FTSE 100 index. In 2017, GSK had a turnover of £30.2 billion and a profit before tax of £3.5 billion, which gave it a gross profit margin of 11.7%. It currently pays an annual dividend of 5.4%, which is paid quarterly. This dividend is covered 1.4 times by the earnings per share. GSK can trace its roots back to 1715, with the current GSK being formed by the merger of GlaxoSmithKline and SmithKline Beecham in 2000. In 2015, GSK was the world's 6th largest pharmaceutical company. The current CEO, Emma Walmsley, previously served 17 years at L'Oréal before joining GSK in 2010 and becoming CEO in March 2017. GSK is divided into 3 divisions. Pharmaceuticals was 57% of the revenue. GSK are world leaders in respiratory and HIV treatments. Vaccines was 17% of the revenue for meningitis, shingles and influenza. And consumer healthcare was 26% of the revenue, which includes products Sensodyne, Aquafresh, Beecham's Cold and Flu, Night Nurse and Day Nurse products. Over the previous 5 years, GSK has had a constant revenue of between 23 billion and 30 billion, but the profit has varied between 7% and 44%, giving an average of the previous 5 years of 20%. The forecast for the next 2 years is 30 billion revenue with a 25% profit margin. The variation in profit margin over the previous 5 years is reflected in the earnings per share. We generated earnings of between 75.7 pence and 111.8 pence per share. The dividend, whilst being maintained, has not always been covered by the earnings per share. GSK is considered to be a defensive stock. Its share price beta is 15% less volatile than the FTSE 100, and over 2018 its share price has improved, whilst the general index has declined. GSK's share price has a standard deviation of 98.4 compared to 361.4 for the FTSE 100 index. The selling of Horlicks to Unilever, announced at the beginning of December for 3.1 billion, was generally well received by the market, but this was offset later that day by the announcement to purchase Terraso for 4 billion. It was considered that GSK had paid too much at $75 per share in cash, which represented a premium to the price of 110%. The announcement of a joint venture with Pfizer to combine their consumer health businesses into a new world-leading joint venture, which GSK will hold 68% stake, was well received by the market. The 2018 results are due to be published the first week in February. Prior to Emma Walmsley taking over as CEO, there were calls for a breakup of the GSK group. With the company forming a new consumer healthcare division with Pfizer, the selling of Horlicks and the purchase of Terraso, GSK will be more focused on its more profitable pharmaceutical business. It is considered that with the rising life expectancy and ageing demographic, the worldwide demand for GSK products is expected to grow. GSK has a price-earnings ratio of 13.4 compared to the FTSE 100 of 11.4 and a dividend yield of 5.4% compared to the FTSE average of 4.48%. The dividend is covered 1.4 times by earnings, and with GSK becoming more focused, I have given the GSK a rating of 4.3 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.